Hello, hi over here. This is Kelvin here again. Welcome to today's Daily Dose of Market Insights by OANDA. Very good morning to all. Today will be Thursday, the 26th of October. So before we get started, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And also, any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So with that, this will be the key gist of our daily dose of market insight. Will be a recap of key highlights and events that take shape yesterday, which drives the overnight market. That means the overnight European session as well as the US session, and what are the key events and data to look out for today, and as well as early tomorrow US session, early tomorrow Asia session before the start of our usual daily dose, which is at 11 a.m. And as well, we will round up the short-term technical outlook on the broad-based asset classes ranging from FX, benchmark stock indices, as well as the commodities market. So with that, let's recap what happened yesterday. So those who actually have been following our daily dose of market insights, I believe that you all are able to gain pretty insightful we call it analysis, and as well as the movement on the broader based asset classes. So since the start of 4 weeks ago, we have been we call it have a view that the short term to medium term bearish trend on the global stock market is still pretty much intact, driven by the fact that the US 10-year Treasury yield is still in an upward trajectory, heading towards the next key resistance at 5.2%, and it plays out as expected, despite that rosy we call it outlook and earnings from Microsoft. So yesterday, the US benchmark indices tumbled as expected. So what we could see over here is that the worst performing was the Nasdaq 100. So let me share my screen over here again. Okay, so we'll see over here is that, let me go to my watch list. All right, so we could see that the worst was Nasdaq 100, 2.47%, followed by the Russell 2000, negative 1.67%. So indicating to us that the prior 2 day of rebound that since the start of this week is more of a dead cat bounce. So what we could see is the continuation of this impulsive down move. So like we say, short term, there will be oscillation within a trend. So where do we go from here? Will there be another bounce coming into place before another down move, or will it be a continuation of this bearish impulsive down move on the benchmark US stock indices, which could translate to what I call further down move in the global benchmark indices? We'll take a look at that short-term technical outlook later on. All right. So this is the key event that took shape yesterday, and also bear in mind that yesterday we do have earnings that came out earlier this morning, which is Meta. So Facebook actually have a rosy we call it earnings. We call it surpass the earnings. So if you look at the earnings session over here, this is was Facebook earlier on. Let me share with you all. It's Friday. Okay, 1 second. Let me zoom up again. Yeah, Meta. So let me expand it so y'all could see. Okay, so Meta actually beat expectation. 4.39% EPS, expectation 3.64. Okay, but what's interesting over here is that after the market hours, Meta actually tumbled by negative 3%. Okay, indicating to us that right now, the broader macro picture, which is the US 10-year Treasury yield, that is driving the movement of the benchmark US indices at this point in time. Okay, a strong bounce at close to the 20-day moving average at 4.75%. So next key resistance 5.2%. All right, so no clear signs of a bullish exhaustion, indicating to us that the short to medium term uptrend on the US 10-year Treasury bond is a US 10-year Treasury yield, not bond, yield is still pretty much intact on the upside. Why does it have a negative feedback loop on the benchmark stock indices? US 10-year Treasury yield is like a global long-term risk-free rate. That means if a global long-term risk-free rate going to goes up higher, longer-term cost of funding will actually increase, which potentially could actually string profit margin. So this is the most easiest explanation that I could actually come up with to actually explain to you why a rising 10-year US Treasury yield is negative for benchmark stock indices. All right, good. So now, on the other hand, over here is these are the key events that took shape overnight session. And the definitely for sure the FX market was actually pretty much bullish on the dollar, broadly speaking, and the commodity markets were kind of sideways. Why? Because oil actually recovered right at the key support level for WT crude oil at 83.20, go kind of sideways. Okay, now what are the events to look out for today in terms of economic data releases? So today will be Thursday. So today will be pretty key as well. So we do have over here on Thursday, we have the ECB interest rate decision that's out later at 8:15 p.m. Singapore time. So likely there will be no hike going forward. It will be a first pause after 10 consecutive meeting of an interest rate hike. So the refinancing rate will be at 4.5%. Why market is expecting no hike? Because given the fact that if you recall on Tuesday, there will be this flash PMI data out from Eurozone, indicating to us the rising risk of stagflation. Okay, then on top of that, we do have GDP, flash Q3 GDP up from US. Consensus is expecting a pretty much strong number at 4.3%. We call it a quarter on quarter versus 2.1% that was seen in Q2. All right. So if GDP number continue to come in within this strong number, within this consensus expectation, potentially we could start to see another round of what I call we call it upward pressure in the US 10-year Treasury yield. Why? Because that actually will actually maintain potentially another interest rate hike coming forward into the 2023 before 2023 ends in the December FOMC meeting. Okay, so now with that, what other key things to look out for? Is definitely for sure there will be a the ECB President Lagarde press conference at 8:45 p.m. Singapore time. So market will be interesting to hear what are her view, given the fact that the latest PMI number up from flash PMI data for October up from Eurozone, indicating the risk of this stagflation. Then do not forget over here is that in the previous ECB, we call it staff projection, they're actually projecting higher inflationary pressure going forward in 2024, and only expecting the inflation pressure to actually ease in only in 2025. Okay. Then early in towards the early Asia session tomorrow at 6. Okay, pardon me. Give me a minute. Yeah, at 7:30 a.m. will be the Tokyo Core CPI year-on-year inflationary data coming up. So this will be like a leading, we call it indicator for Japan nationwide. We call it inflation number, but usually the Tokyo area will announce. Uh, Market participant will use this Tokyo area CPI or inflationary data as a what I call a gauge of the nationwide Japan inflation data as well. I give you the fact that it has been pretty much sticky above the 2% level, which is above a BOJ target in the last 1 year or so, pretty persistent. So then do not forget, bear in mind on Friday tomorrow I'll cover more about the BOJ. Next week, okay, in fact coming next week, there will be this Bank of Japan meeting before after the Federal Reserve meeting, FOMC. So right now there is actually rumored within the trading room and as well as among the market participants that BOJ may be forced to actually start to do some tinkering with the YCC, the yield curve control, and may also start to give a bit of guidance that potentially they could start to actually adjust their negative interest rate policy as soon as the first half of next year. So something to keep an eye watch out for. And also, I also later will share with you all, very interestingly, the dollar yen has really reached our key resistance level at 150.30. So those who actually followed closely our daily dose of market insight, I do highlight we have been pretty much neutral since the start of late last week of the dollar yen between 150.30 and 147.40. Okay. So later I'll cover the short-term technical outlook on the dollar yen using a bit of intermarket correlation with the JGB yield and the US Treasury yield. Okay, so these are the key data to look out for. And on the earnings front, this is economic data. So on the earnings front, right, definitely for sure, US earnings is still in the heat of this season. So early tomorrow, Asia morning, after the close of the US session, you have another key US technology mega cap that could actually create another round of volatile movement on the Nasdaq 100 and the S&P 500, given its significant weightage inside these two indices. Will be Amazon will release its Q3 earnings after the close of the US session today. All right, so that's early morning Singapore time at 4:30 a.m. All right, so with that, now let us take a look at the technical outlook on the broad-based asset classes. So with that, let me hide myself so you all could actually expand the screen. Okay, so you'll see the screen much bigger. So let us start with the benchmark indices first. Okay, so over the benchmark indices, let's go to Asia first. So Asia, Hong Kong, with the Hang Seng Index. So the Hang Seng Index right now is coming very close to the pivotal, the support level that we highlighted yesterday. So yesterday we have this bearish bias heading towards the 6,800 level. So over here, right, why this 6,800 level is pretty key. If I go to the daily chart, right, it's actually at the lower boundary of this very complex expanding wedge configuration. Okay, at 16,800 level. All right, so with that, right, it's coming very close to this level. And if you were to flip back to the hourly chart over here, okay, so at this point in time, right, potentially there could be a bounce coming very close to this 6,800 level, given that it's a key support level that is being defined on the daily time frame. So I'll be flipping to a short-term bullish bias condition for today, looking for a potential push up, all right, to retest yesterday's US session high. Oops, let me put it in red. Okay, at 17,200 level. Okay, so a break above 17,200 level potentially could see a further push up to retest the 20-day moving average, also confluencing with a graphical minor congestion resistance at 17,600. But however, if we start to see a breakdown below 16,800, then this down move potentially could continue to expose the next support coming in at 16,550. Okay, so flipping to a short-term intraday bullish bias condition on the Hong Kong 33 index, okay, holding above 16,800. All right, so now moving on, next will be the German 30. So German 30 continue to actually react off the resistance level at 14,885 as expected. So no broke below the minor support level at 14,825. So with that, right, no change, still maintaining that bullish still maintaining that bearish bias condition below 14,990 key short-term pivotal resistance that we had yesterday, looking for a further push down to retest the 23rd, this Monday swing low area at 14,630, then thereafter followed by 14,520 support level. However, a clearance with hourly close above 14,990, extension of this corrective counter trend rebound towards the 20-day moving average, acting as a resistance at 15,135 / 15,195, also confluence with this minor congestion zone over here graphically. So still maintaining that bearish bias condition on the German 30 below the 14,990 short-term pivotal resistance level. Okay, now next will be the US benchmark stock indices. Let's start off with the Dow Jones Industrial Average first. So the Dow Jones Industrial Average, the movement yesterday was not so drastic as the Nasdaq 100. So with that, it reacted off exactly at the 32,230 key short-term pivotal resistance level. So with that, we will be still maintaining that short-term bearish bias condition, holding below 32,230, looking for a test at this minor swing low area of 4th of October and 6th of October at 32,830 level. A breakdown below this level could extend this down move potentially to seek the next support level at 32,570. So with that, we were still maintaining that bearish bias condition on the US Wall Street 30 index, holding below 32,230 key short-term pivotal resistance. But nevertheless, an hourly close above 32,230, a clearance above it, potentially could see another round of choppy counter trend rebound to retest the next resistance level at 33,510, which is confluence with the 20-day moving average as well. Okay, so now with that, let's take a look at the Nasdaq 100. So the Nasdaq 100, for sure, this bearish downtrend actually plays out as expected. So it actually hit that 14,300 key short-term support level we highlighted yesterday. Hourly RSI now is at an extreme oversold region, so potentially, right, we could start to see a minor bounce going forward over here. So the minor bounce potentially could actually retest our Titan, very close to the Titan key short-term pivotal resistance that we have for today at 14,450. So what is 14,450? For sure, is very clearly the former swing low area of 28th of September, 4th of October, and as well as 23rd of October broken down turns into a pullback resistance, where yesterday during the during the close of the US session, it actually retest this level before it tumbled in today's Asia session. So for sure, this is a Titan key short-term pivotal resistance that we may want to highlight. Any potential bounce should not surpass this 14,450 key short-term pivotal resistance. Then thereafter, looking for a potential slide to test the next support area at 14,150, followed by 13,960. And 13,960 is a key support level to watch. Why? Because on the daily chart, what we could see over here on the Nasdaq 100 is exactly at the 200-day moving average at 13,960. So, but however, if we start to see a clearance hourly close above this 14,450 key short-term pivotal resistance that we have for today, then this short-term bearish bias condition will be invalidated to see a squeeze up or is the start of another round of counter trend rebound to retest the 20-day moving average and as well as this graphical resistance level, the former major ascending trend line from December 2020 low now turns into a pullback resistance, also confluencing with the 20-day moving average at 14,825. All right. So that's the short-term technical outlook for the global benchmark stock indices. Now let's start off with the FX market first. So for FX market, the dollar still remains strong against the European currency, especially against the sterling and against the euro dollar. So let us take a look at the euro dollar first. Yeah, for sure. Over here, euro dollar. So euro dollar over here going to inch lower. Okay, so right now breaking below the 20-day moving average during the US during today's Asia session. So with that, right, I will have a Titan key short-term pivotal resistance for today. Yesterday we did mention it's at 1.0635. So for today we will shift it down lower over here at this area, which was yesterday's I would say European session high at 1.0610 level. Okay, so 1.0610 will be my key short-term pivotal resistance for today, maintaining that short-term bearish bias condition on the euro dollar, given the fact that it has broken down the 20-day moving average right now, looking for a retest at that minor swing low of 13th of October and 6th of October at 1.0490 in first step. But however, if we start to see a breakup above an hourly close above 1.0610, then we'll still start to see another move of choppy upward movement to retest the 50-day moving average at 1.0670 / 1.0685, which is the swing high of 24th of October, which is this Tuesday high. Okay, so still maintaining that bearish bias condition on the euro dollar. Now, sterling dollar next. So sterling dollar, it actually squeezed down much lower, now breaking below the swing low of last Friday at 121.10 level, already broke down below this level. So we were still maintaining that short-term bearish bias condition, looking for this 1.218 Titan key short-term pivotal resistance for today, which is also the 20-day moving average. So as long as this level is not surpassed to the upside, potentially you will see a retest of 4th of October swing low area at 120.50. A break below it potentially seeks the next support level at 119.60. So however, if we start to see an hourly close above 121.80, then we will see a push up towards 1.2285, which is the key short term key we call it the 50-day, no, pardon me, which is the key the minor swing high area of 24th of October, okay, at 122.85. So still maintaining that short-term bearish bias on the sterling dollar. Okay, so with that, let's immediately take a look at other dollar pair. Will be the Aussie dollar. So Aussie dollar yesterday we have a bullish previously we have a bullish bias, hit the top of the range. So yesterday we flipped to a bearish bias, and right now is coming very close to the lower boundary again. Okay, so yesterday we have a support level at 62.90. So 62.90 has been taken out, and right now it's actually probing the 62.60 lower support level. All right, so what's this level? If you go to the daily chart from here, immediately 62.60 is at this region here, and also at this lower boundary of this descending wedge configuration as well. Then after 62.60 for sure will be the swing low area of 13th of October at 62 figure level. So now let's go down to the hourly chart again. So on the hourly chart, right, the hourly RSI right now is actually at the oversold region. So with that, right, potentially there could be a minor bounce coming into play at 62.60 area. So with that, right, we will be having this very short-term bullish bias condition within a range of this Aussie dollar, the Australian dollar, that is still we call it evolving. So I'll be using 62.60 as my key short-term pivotal support level for today. Looking for a push up around this region here, okay, which is also right now today's Asia session high intraday at 62.95. Okay, 62.95 level. So a break above 62.95 thereafter potentially could seek a push up towards the 20-day moving average, acting as a resistance level as well, and so confluencing with this minor graphical congestion zone at 63.50 level. All right, so flipping to a short term bullish bias condition within a range, longer term range configuration of the Aussie dollar. But however, if we start to see an hourly close below 62.60, then potentially we could see a further slide down to test the 62 figure level on the Australia dollar. Okay, so now let's take a look at the dollar yen. Okay, the dollar yen. Okay, so before we go down to the dollar yen, I want to share with you all the JGB yield, because it has a kind of an intercorrelation with the dollar yen. So you look at over here is that the JGB yield going to inch higher within also the trajectory of the 10-year Treasury yield. But the momentum over here, if you look at it, now the spread between the 10-year JGB yield and the 10-year Treasury, means 10-year Treasury minus the 10-year JGB yield, it started to move a bit sideways. And in fact, today's price action, it started to actually, let me move this level, it started to actually inch downwards. So indicating to us that this spread right now over here is not, it seems to be start to consolidate, okay, which i.e. should be supportive of a slowdown of the yen weakness against the dollar. Okay, very similarly, if you look at the shorter term one, where the 2-year JGB yield, the 2-year Treasury spread, right, is still hovering at the 5.11 level. Okay, so this 2-year JGB yield spread, right, is not being intervened by the Bank of Japan, but more Bank of Japan intervened the 10-year. So this 2-year JGB yield is more like allow the market to fast to detect. So the 2-year Treasury yield over the 2-year JGB yield also start to be flattish. So that also kind of support put away that in the short term, at least put a halt to this yen weakness against the dollar. So where do we go from here of the dollar yen? Okay, so let's take a look at the dollar yen technicals right now. So let me flip to the dollar yen technical. So the dollar yen technical right now, right, it now managed to surpass the 150.10 level. So now it's very fast approaching the 159 short-term pivotal resistance level. So I'll be using 150.90 as my key short-term pivotal resistance level. So looking for at least a push down in first step towards 149.40. Okay, my apologies, it's 149.40. So that is the 20-day moving average. So with that, right, I'll be flipping to a short-term bearish bias on the dollar yen below 150.90. All right, so with that, that will be the dollar yen technical outlook. But however, if we start to see a breakup above 159.90, 150.90, and hourly close above 150.90, then this squeeze up will continue towards last October high at 151.95, where the intervention took shape yesterday, and where the BOJ intervention of selling dollar, buying the yen took shape last year October. Okay, so that's pretty much cover the FX market. Now let immediately go down to the commodity market. So for the commodity market, right, immediately let's take a look at WTI crude oil. So crude oil yesterday, we have a neutral bias between this 83.20 level and 86.40 level. So price action actually staged a strong rebound right at the 83.20 level, forming a long tail candle bullish reversal candlestick. So 83.20 is indeed a key short-term pivotal support level to watch. And most importantly, the rebound actually also has been accompanied by a bullish divergence seen on the hourly RSI. So with that, right, I'll be actually flipping to a bullish bias. Any potential dips below, pardon me, any dip that is actually managed to hold above this 83.20 level, we could actually potentially maintain that short-term bullish bias condition. A break above the 20-day MA, now acting also as a intermediate near-term resistance at 87.50, potentially could see a further push up to retest a last Friday swing high area at the 91 psychological level. But however, if we start to see a breakdown of the hourly close below 83.20, for sure, this down move should potentially continue to retest the longer term support level at 78.70, which also confluencing with the 200-day moving average, and as well as the swing low area of 24th of August. All right, so flipping to a bullish bias again on the WTI crude oil or the West Texas oil, as long as 83.20 key short-term pivotal support level holds. Okay, now let's immediately go on to spot gold. So if you look at spot gold over here, spot gold level has been pretty much sideways trading right now. But what we could see over here is that in the last few weeks of price action, it refused to come down and start to shape a higher low, holding above a minor support at 1960 level. So given the fact that price action start to be much more positive in the last 2 days of price action, so with that, we'll be flipping to a short-term bullish bias again on the spot gold, the XAU/USD, with a key short-term pivotal support level at 1957 for today, looking for a potential push up to 2006. A break above it could take us up to the top of this upper limit of the channel at 2028/2037. But however, if we start to see an hourly close below 1957, potentially we could start to see a push down to retest the 200-day moving average again, where that retracement scenario start to reasserts itself towards the next support level at 1932/1920. All right, so with that, I've covered much ground on today's daily dose of market insight. So these are the key highlights that I'd like to share with you all. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.